outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa offers day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa offers day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa offers day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa offers day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa offers day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa offers day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa offers day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa offers day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa offers day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa offers day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa offers day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa offers day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Hey everyone, welcome back to another webinar. This is going to be talking about news and trading session in preparation for the NFP tomorrow and the CPI next Tuesday. So we're going to go through the theory and practice. Normally we do this in between the NFP and the CPI, but we are going to do this first, which I think it's pretty great because I'll get to explain the other types. And we can go through a lot of the stuff there. All right, so before we begin, just a reminder that as the new year approaches, Octa is doing a promotion right now. You should be getting your double your deposit bonus from the 4th to the 22nd of December. There's also going to be lower spreads on popular instrument. There's going to be increased leverage on daily stocks. Also, when you trade with your real accounts, for every 2 lots, you're going to get a ticket, and this is for a draw on the 26th of December on this channel as well. What's up for the taking here? There's a Rolex watch. There's also 5, I believe, Apple Hermes watch. So other than that, you should be getting your exclusive merchandise from Octa as well. So make sure you are going to be in the draw. I think it's a very interesting price, and I don't actually think there's actually any brokers out there that actually provide Rolex as a price for the draw at the holiday seasons, which is right about now. Okay, so my name is Viren Jaro. Let's get this started for tonight. Okay, as per usual, we're going to have the disclaimer. Any opinion discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. Be attentive when determining the volume of your transactions and consider all possible risk factors. All right, there's going to be a bonus for participants as well. If you register this through email, you should be getting your access to the private Telegram channel. And I'm going to show you the promo code to double your deposit bonus if you want to use it, which is non-farm 2023. So feel free to use the code if you want. That's for the promo code to double your deposit bonus. Don't mind the language. I actually load up the wrong slide on this one here, but the code to is non-farm 2023, and it's valid until the end of 2023, which is we're in the final month of 2023. All right, so we're gonna go through a few stuff. Good morning, good evening, good afternoon, depending on where you are. Welcome. We are gonna talk about the theory of news trading, and when we talk about news trading, this is likely going to be different from a fundamental analysis. So I'll be more than happy to answer if you have any questions regarding fundamental analysis or any quirks of news releases. More than happy to talk about it. If you have any questions, just fire away on the chat there. I'll be more than happy to answer it. But for tonight, we are going to talk about the advantages and disadvantages of news trading and the most profitable news for trading. We're also going to take a look at news trading and price action. I think this is great following our sessions on the SMC for the past 5 days. I think, with the knowledge that you have about SMC that we just covered in the past 5 days or the past 2 weeks, what you learn is probably going to be useful for tomorrow as well. And we'll take a look at how price action kind of works in news trading. There are several general rules for news trading as well. I want to talk about the buy stop and the sell stop strategy, which is what we are actually going to be using tomorrow. And with the knowledge that we just covered on the SMC, I think I'm more than comfortable right now to talk about the buy limit and the sell limit strategy as well, because without prior knowledge to some basic technical analysis, buy limit and sell limit strategy, it does take some time to get used to it. Okay, cool. So let's jump in and we'll talk about the advantages and disadvantages of news trading. And the advantages to this is that all the necessary information can actually be found in the economic calendar. So there's no need to delve deeply into technical and fundamental analysis. Now, let me just pause here for a little bit because you guys are probably wondering. News trading, that is not fundamental analysis. Okay, so let's just make this clear. When we talk about news trading and the stuff that we're actually going to be talking about tonight, also during the NFP release as well as the CPI release, sure, I'll give you a little bit of a background into the NFP, what to expect, the CPI, what to expect and whatnot. That's fundamental analysis. But when it comes to news trading, it's actually really it's very different to fundamental analysis. All right, with fundamental analysis, we do our research. Let's say if we are using fundamental analysis to trade stocks, for example, we look at their balance sheet, we look at the earning reports, all the fundamentals that a company needs to publish as a public company, or maybe when we talk about the FX market or the futures market. The NFP numbers, for example, like tomorrow, the economic data, manufacturing numbers, the inflation numbers, those are going to be your fundamental analysis, right? But for fundamental analysis to work, you kind of need to understand how they weave into one another, and how do you actually perceive the economic status of a country, for example. But with news trading, you don't actually do that. With news trading, we look at the numbers, we jump in, maybe 5 minutes, 10 minutes before the news gets released, and we set up our trades. And that's the whole goal with this webinar. Just want to show you that without any knowledge or understanding of the economic numbers, you can actually still news trade. Okay, so I think that's the advantage there with news trading. If you know what you're doing, and which is what we're going to be covering tonight, it is quite easy to understand what to do. Okay. And the other advantages is that events in calendars are actually ranked in order of importance, and it does help to make adequate decisions. With any news releases, not all news are going to be equal. Not all news releases are equal. They have several impacts into the market. And of course, if you understand fundamental analysis, then you would understand the context on what makes that news more important during a certain period of time. Okay. So for now, with the NFP numbers, I think it's really important for the NFP numbers because we just had a JOLTS number that was below 9 million, which was released on Tuesday, just about 2 days ago. The NFP number released tomorrow is going to be very important. We also have a number that's going to get released in about an hour and a half time. It's actually the weekly unemployment claims. Okay. Publication of statistical reports noticeably increases the volatility, and traders can earn large sums on it. This is the advantage, right? The market movement can be very quick. You can actually benefit of it. I think the disadvantages would be the opposite as well, because news releases, if it's a high impact news and a lot of traders are waiting for that particular news, it could actually create a lot of volatility in the market. Now, our job as a trader, not an investor, okay, is to look for this volatility. Now, investors would want to avoid volatility in their investment, but as a trader, we actually need that volatility. If the market doesn't move, it's actually going to create a lot of trouble for us traders, okay? Simplicity of a strategy. You don't have to learn complex mathematical formulas. You don't need to learn complex technical analysis or to draw the most complicated shapes on the chart. You need to be able to make a trade and close it. And this is something that we are going to be covering today as well in terms of the strategy and the NFP tomorrow. There's going to be a set of strategy, but to trade the NFP and the CPI, basically what we're covering tonight should be more than sufficient to get you started in news trading. There's also going to be minimal time expenditure on trading because you know exactly when to go to the trading platform and what to do. And best of all, the trading process itself can take only a few minutes. And in fact, during our NFP and CPI trades, if you want to review the previous month's trade, you feel free to do that. We've actually started this series about more than half a year. So there's about 6 months that we've actually been doing live and NFP and CPI. It's probably more than 6 months. I think about 7. We started in May, so about 6-7 months that we already have the previous trading numbers. And also, if you want to take a look at how quick sometimes we actually trade those trades, the record was last month, I believe. It was only about 30 seconds. Sorry, it was less than a minute. So out of the 6 times that we traded live, I believe there were about 2 or 3 instances where we actually closed our position within the first 1 minute, and we just stay clear of the market and be done for the day, pretty much. All right. The disadvantages is that not always, it's not going to be all the time that market situation develops the way logical thinking and common sense predict. I think this was actually us yesterday. Sometimes the news release, which is good for the currency, supposed to be good for the currency. For example, a good economic numbers that's supposed to be good for the US dollar might not turn out to be good for the US dollar, and I think there was a little bit of a confusion. All I can say with this one here, it is kind of a disadvantage if you don't actually understand the fundamental analysis behind it. But if you do, and you understand the price action leading up to that news releases, you can actually see sometimes that the market is already pricing in something. So when the number comes out as per consensus or kind of disappointing in just a little bit, it does sometimes create a little bit of an opposite effect. So the logic where the market buys on the rumor and sell on the fact, sometimes it does happen during news releases. So I think that would be one disadvantages. But if you take your time and spend some time on fundamental analysis or learning about fundamental analysis, I think this is a disadvantage that you can actually turn around. All right. The other thing is that not all news can cause any reaction at all. As we said previously, we can rank by the importance of the news releases. I'm actually going to show it to you right now on the calendar that we can actually rank it. But yeah, not all news can actually cause any reaction at all. And the other thing is the opposite of the huge profit that you can make. If you don't guess the direction or if you don't position your trade correctly, maybe if you didn't analyze the situation correctly, you don't understand the context of it, you could experience a significant loss as well, because the volatility goes both ways. And when it comes to news trading, I prefer to not have a bias going into a news release, because sometimes our bias could make us be less neutral, and that's where it becomes problematic as a news trader. Okay, cool. All right, so in terms of the different type of news for trading, I think all news is divided into two categories. Number one is going to be the hot, unexpected news. This includes terrorist attacks, military conflicts, like what's going on in the past 2 months in Gaza. You got military conflicts, natural disasters, and this is where it becomes kind of unpredictable. This is out of the schedules that we have. If it happens, sometimes it will create kind of a ripple effect into the market. One thing leads to another. For example, the stuff that's been going on in Gaza for the past 2 months, it causes gold to kind of actually triggers an all-time high, which is something that we actually saw this Monday. We also saw a little bit of an increase in oil prices, and then all of a sudden it kind of reverses because it's kind of impacted by this unpredictable events that happens. The other one is the periodic news that comes out regularly at the quality reports of the companies and everything that goes along with it, as well as those fundamental schedules, fundamental event schedules that we have, like central bank meetings and monetary policy decisions. These are actually scheduled events, so we already know when they're actually going to be released. We got quarterly GDP reports like just we had from the US last week. We already know when those numbers are actually going to get released. Inflation numbers, the CPI, the PPI, the PCE, the core inflation numbers, that's scheduled for next week for the US, but all other countries have their own calendar schedule as well. Indices of business activity in manufacturing and services, like the PMIs, ISM manufacturing PMIs, flash manufacturing and services PMI. Those are scheduled events, and then we have the unemployment numbers, or the employment numbers, which is tomorrow. That's scheduled as well by the Bureau of Labor Statistics in the US, and we'll delve deeper into the NFP stuff, which is going to be tomorrow. Okay. All right, so I'm actually going to pause here for a little bit. I'm actually going to load up the economic calendars. If you're wondering where it is, you can actually go to Octa FX website, and it will be under analysis, and then there's going to be a link to economic calendar. You can set it up for this week, what's actually in store for this week, right? I want to take a look at today. And I can change my time if you want to, depending on where you are. You might want to adjust it, but the standard would be the GMT 00. That would be London, but I think it would be +1 right now for London, right? If I'm not mistaken, but no, London is still GMT, right? So you can filter that out, and you can actually choose, if you go to advanced filters, You can choose the countries that you want the data to be from. So I don't need Greece. I can actually hide Greece. I don't actually need Greece numbers. Portugal, I don't need it. Spain, UK, US, yeah, everything I need that. In terms of category, I'm just going to leave it there. And this is where you can actually set up to look at the event impact, right? I would normally click off low. I don't really trade anything that has a low impact. If medium still produces a lot of data to you guys, then you can actually hide that as well. So for this one here, there's a lot of numbers that I actually don't need, like the import and export that would fall under the medium. For Aussie, I would just look at the total trade balance, right? But yeah, I can hide that, and I actually don't need to look at that. And this one here is the news, and depending on the platform that you look at, it might show it as a medium impact, or it could actually be a high impact. Weekly jobless claims, as weird as it is actually labeled as a medium impact news, but to me, it does sometimes becomes a high impact news depending on the context of the market. For example, the reason why this week's number is going to be a high impact news is because we already have a disappointing job opening numbers in the US. We got NFP tomorrow. Market is expecting a much larger gain to the NFP numbers compared to the previous month. So I think attention would come into the initial jobless claims, just to give you a little bit of a hint into what the NFP number is going to be tomorrow. But all of it is actually going to be here. In fact, if you're just starting out with news trading, I would recommend that you actually take just the high impact news and just focus on that. I normally just look at the whole week. And then you have everything there that's a high impact news. But if you are new to this, it's okay, because every Monday we actually publish an outlook as well. And I normally discuss the fundamental aspect of the trading week as well. Okay, so yeah, this is going to be your best friend when it comes to news trading. So for today, I want to focus on today. Numbers that's gonna get released for today. I don't think there's actually high impact numbers that's going to get released during the US session. I believe we are waiting just for that weekly unemployment claims for today, right? Okay, it's not showing up. Let's refresh it. There we go. Okay. We're waiting for that initial jobless claims, which is going to get released in about an hour's time. Okay, cool. All right, so we actually talked about this if you were attending and following through from the SMC sessions. It's basically the same thing. With any news releases, there's always going to be a consolidation phase, a development phase, and a termination phase. So a consolidation phase happens leading up to the news releases, and then immediately after the news releases, that's where we have the development phase. Normally it kind of breaks out of a certain range, and then after that it's actually going to slow down. It's going to go into range bound market condition again, and then it will go into the termination phase, and then it will just end the whole thing. So that's the reason why we actually got in and out really quickly during news releases, because we are always mindful about the termination phase that's actually going to follow through after a news release. Okay, all right, so let's talk about the general rules first for news trading, and then we'll go through the different order types. But general rules for news trading is that you really want to study the market and the dynamics of a currency pair. As I mentioned on Monday, it's always good to check out the outlook that gets published every week. I think that gives you a little bit of a context into what's actually happening in the financial market. You can also study the reaction of a currency pair to that particular to that latest news releases. For example, if you are new here, and maybe you're watching this webinar sometimes in the future and you're new to trading, you can just jump in to our live trades, take a look at the reaction of the currency pair, maybe even if you don't jump into a live trade, but if you want to study what happens if a certain news releases get published, if it's above expectation, what could potentially happen, you can actually study the reaction of those currency pairs. And in fact, because we've done so much NFP and CPI trades, by now I kind of have a little bit of an understanding into what could possibly happen during those news releases. We actually have a set of patterns that, it kind of repeats over and over again. So it's always good to study the reaction of a currency pair to that particular news releases. All right, and then obviously prepare for trading. Mark the levels on the chart. This is something that we're actually going to be doing live tomorrow. And then decide on your strategy. When are you going to be opening and closing that order? You want to choose a working time frame as well. Do you want to do your analysis on the 5 minutes, 15 minutes time frame, an hour, or a daily time frame? You also want to determine the maximum risk for that one particular trade. So make sure you are using stop loss or maybe trading stops, right? So I wouldn't even think about using stop loss. You really need to use a stop loss, and sometimes a trading stop as well. Also decide on the the terms of the deal. How long are you actually going to be staying in the market for? Will it be a quick trade, or is it going to be a long-term one? Is it going to be more than 1 hour? Is it going to be more than a day? Are you going to leave it overnight, or maybe leading up until next week? I don't know. But typically with our live trade during the NFP and CPI trade, I want to be in the market for the shortest amount possible, right? The best one is actually to jump in and immediately get out from the trade. Either the trade hits your stop loss or it takes out your profit target. And that's the way we look at news trading. We just want to jump in. We want to get out as quickly as we can, because with news releases, especially during the NFP and CPI numbers, the market tends to be a little bit choppy as well. It could go in one direction and it might actually reverse on itself within 5 minutes, 15 minutes, half an hour, maybe even 1 hour's time frame. But there are actually a pattern that we can actually learn from. Okay. All right. So I would say if you're watching this, I think you should screenshot this particular slides here, because these are the different order types. These are the pending orders. Maybe if you are familiar with the pending orders, that would be great. If you are not familiar with the pending orders, I'm actually going to walk you through how to use the pending orders. All right. So the logic behind this is, let's take a look at the one on the left first, okay? The stop orders. So for the stop orders, if you take a look at the chart there, a buy stop is an order placed above the current market price, and you are expecting price to continue to rise up, right? You're expecting price to continue to break a certain resistance. For example, you're expecting price to create a new high, maybe. That's where you want to use a buy stop. So a buy stop is an order above the current market price, and if that order type gets hit, if that buy stop got hit, it's actually going to open a long position for you in the direction to the upside. Okay, so you're actually going for a long position. But the stop orders means if you're expecting a resistance to be broken, do a buy stop. If you're expecting a support to be broken, do a sell stop. Okay. So that's the stop orders. Again, a buy stop are orders placed above the current market price and you expect price to continue to go up. A sell stop are order placed below the current market price and you expect price to continue to fall down. Okay, so breaking resistance, do a buy stop. Breaking support, if you expect it to continue to go down after breaking support, do a sell stop. Okay, the other one are the limit orders. So limit orders are also orders placed above the current market price, but unlike the buy stop, where you want to continue buying if it hits a level higher than where price is, a sell limit will actually trigger a sell order once price goes above the current market price. Okay, let me just pause for a moment. Okay, so yeah, if you're expecting a resistance to hold, for example, like during the SMC webinar, maybe we look at order blocks or maybe the fair value gap. If we expect the order block to work or the fair value gap to work as a potential resistance, for example, then we can actually place a sell limit at this particular level. So when price goes up, you're expecting this level to actually hold prices down. Then, if you expect price can kind of fail at that resistance, then you want to have a sell order triggered. That's when you use the sell limit. Okay, the buy limits are orders placed below the current market price, but you expect price to once hit that particular level, it will bounce off the support, and that's when you create the buy limit. Okay, so these are the pending orders. I know the naming convention sounds a little bit weird, but it is what it is. So just think about it. If you look for stop orders, you want something to go in one direction, break a support or resistance, and continue going in that one direction again. I'll explain a little bit more on the limit order once I gave out the examples here. Okay, but actually, you know what? I'll just do it right now. So let me load up. So let's say this is on a Euro USD, right? Hypothetically speaking, let's say we're looking at that particular level as a resistance, for example. Then I could actually create a sell limit up there. So what I'm anticipating is if price goes up there and fails to continue higher, then you expect price to continue to go down because it's in a downtrend. That's where you have that sell limit order up top. Okay, so that's the sell limit order. I'll just give you the example in a minute. All right, so let's take a look at the buy stop and the sell stop first. We are going to be looking at the different type of price action first. Number one, we are looking at a consolidation phase, right? Again, consolidation phase, range bound market condition before news releases, development phase, price reaction after the news get released, and then the termination phase where it kind of slows down a little bit, and that's where you want to get out. So before a news gets released, this is what happened. We basically have a consolidation phase in the market, right? And you will get a certain corridor of volatility, or I would say simply just a range in price, right? We basically goes range bound market condition for a little bit, waiting for that news releases. When the news gets released, it will break either the upper side or the lower side of the range or the corridor of volatility. So what you want to do is you actually want to throw in a net, right? You don't know where this is actually going to go. And it's always best to assume that you don't know where it's actually going to go with news releases, okay? So we have a little bit of a range. What you want to do is you want to create a buy stop above the range and a sell stop below that particular range itself. During news releases, this is actually what's going to happen. And this is how we actually trade our NFP and our CPI trades during the initial release. It will activate your buy stop. You are in a buy trade. You need to cancel the other order, okay? Because you only have one direction. You only choose one or the other. Before the news release, we have a buy stop and a sell stop. But if either one gets triggered, you want to close the other one because you don't want the market to go back and then take your other orders, and then you're actually hedged in position. And this actually happened to us when we did our live trades a few times. I think about half of the time there's always going to be one instrument that actually hits both the buy trade and the sell trade at the same time. It actually causes a lot more headaches. All right, so remember consolidation phase, right? Waiting for that corridor of volatility. You want to throw in your net, right? You want to have a buy stop and a sell stop just in case. If it breaks to the upside, you have a buy position. If it breaks to the downside, you have a sell position. Now this one here, it actually breaks to the upside and it triggers your buy trade. So you need to cancel your other pending order, which is the sell stop. Okay, so your buy stop get triggered. You have a buy trade. The market goes up. Make sure you set your stop losses. Make sure you get your take profit level, right? What happened after news releases? After you wait for a little bit, this is still in the development phase. You can actually start moving your stop loss to break even, to lock in some of the losses. Sorry, to prevent the losses. You want to lock in some of the profits. You can actually move your stop loss to break even, or if you feel like you had enough, then just get out from the position itself. Okay, I didn't see that question because sometimes there are spikes, so I want to know about when to expect them. What I can say is always expect that spikes to happen, right? We cannot we cannot anticipate. We can anticipate, but we cannot predict when the market is actually going to create spikes, which is going to kind of create a little bit of a whipsaw in the market. Just assume that with every news trading, it could potentially happen to you because during the spikes, it could actually trigger both the buy trade and the sell stop and the buy stop at the same time. And as I said, it did happen to us during our live trade a few times. So it's actually very common. But with the spikes, the point of having the buy stop and the sell stop is you actually don't have to manually react to that spike, because if you have a buy stop and the market just shoot up, the logic is that your buy stop should get triggered even though the market runs up. Within a second, your order should get filled. That's the whole idea. All right. So let's do a little bit of a practice. Okay. I'll load up on the one on MT4 first, and then maybe I'll do some example on the trading view. But for now, let's just look at what we have. Let's say we have a news that's going to get released in about an hour's time, right? So we have a little bit of a window, which is about an hour. So what you want to look at is actually the range that the Euro USD has. Because if you look at the range on the Euro USD, technically the range would actually be this, right? This would actually be the range. So what you want to do is you want to create a buy stop above the current range. And how to do that buy stop, you can actually right click on your MT4 and just select trading. I'll just move it here in the middle, trading, right? And then there's going to be buy stop. It's okay, just put it anywhere above, just click anywhere above the current market price. That's completely fine, because you can just drag around this level. I want to have it at about 1.0785 as a buy stop if it gets triggered. And for this one here, because we're so close to the downside, I want to create a sell stop just slightly below, maybe about 1.0752, or maybe even lower at 1.0750 on the Euro USD, because the news is still going to get released in about an hour's time. But yeah, the logic is this: if we have a stop order and you expect the range to be broken, for example, during news releases, maybe the Euro USD slides down like that, you want to be in that sell position, right? But you don't, maybe you're not trading just the euro. I can do this on the pound USD as well. So I can create that order. I'm actually going to leave it. I don't look at it anymore because I want to focus on the other trades as well. So this allows me to trade more than one currency pairs or more than one instrument, which is great. So I can do the same thing as well. I look at the range that we have on the pound USD. This is on a 15-minute time frame. Maybe we actually need to take a look at this range and that range there, leading up to the news. What's likely going to happen? Are there any key levels? It could be useful if you understand it. But for now, I just want to create more trade orders. I want to create a buy stop up there, just in case it goes up. I want it to trigger my buy order. I'm actually going to have it at about 1.2595. The sell stop, I just right click in the chart, go to trading, go to sell stop, and you can just drag around and adjust your sell stop. Now, if you're wondering, I'm not trading from my PC, for example. I don't have this platform. If you're using mobile phone, all you need to do is go to new order, right? Actually, you know what? I'm actually just going to open my MT4 on my phone here. And what's the easiest way to do is to click on a currency pair, all right, on the quotes, right, on your quotes. So I'm not sure if you guys can actually see it on my phone, but go to quotes, and if you tap on one of the currency, for example, the Euro USD, if you tap on the Euro USD, there's an option for new order. Click on new order, right? At the very top, where it says market execution, you can change that to a buy limit, sell limit, buy stop, and sell stop. And that's how you do it on the MT4. Okay, for this one here, you want to change that from market execution to pending order. If you're doing it on the platform, go to pending order. The type of order that you want to do, for example, I want to buy stop or sell stop. Maybe I'll do here a sell stop. At what price? Just type it in. 1.2540, for example, and I can just place it there. I can also set my stop loss as well. So maybe I want to take my profit at 1.2500 if it goes down, right? So I got a sell stop. Stop loss, maybe I'll have it at 1.2575, right? I can place it and it creates a new order down there. So I can drag it and I can adjust my stop loss that's been placed here. Maybe I want to have my stop loss a little bit higher. I'll just have it there. That's all I need to do. All right. And since I'll take profit, it's down there. It's all set up to go. So I can just walk away and leave it. I actually don't need to keep my trading platform on. So maybe if you are running into a meeting or you have something to do right at the news releases, for example, you need to be away from your computer, you can actually set the order and you can turn off your platform. Once price hits that order, it's going to get filled anyway. So if you're not going to be able to be if you're not going to be in front of your computer, I think this pending order types are going to be very, very useful. Okay, for gold, it's not going to be relevant now because the news is, it's the best time to actually start placing your orders is actually 5 minutes into the news. Okay, but for now, if you take a look at gold, for example, swing high and swing low on the hourly time frame to create a zone. Do we look for that? No. When we create that consolidation zone, you actually don't look for, see for this one here, if we look at the hourly time frame, right? You can't ignore Monday's price movement. So by right, this is still going to be your swing high, right? And your swing low would be here. But if you place your orders like this, that's ridiculous because that's about $150 away. So it won't work that way. What you can do if you're doing it on the hourly time frame, you can take a look at the current movement here. See where it actually kind of flatten out from here onwards. All right, so see how it kind of flattens out, and the corridor of volatility that we have on the early time frame. See if I can zoom in a little bit. Is actually not that far away because what we are looking at is actually this one here. I'm gonna place my orders beyond this level because I know there's a high over there, there's a swing high over there, and the lower side you would actually take either this one, okay, or if you want to get in a lot quicker, then you could probably go for somewhere here. That would be the range that we're anticipating, which is actually this one here. That would be the range that we want. So for gold, if you're trading this for the unemployment claims, then you probably want to have a buy stop above that high that we have there, and a sell stop. I would say for the sell stop, I would go for anywhere below 2025, so about 2024.70. I think that would be enough for gold. Okay. What time frame can we use? For news trading, I actually use 50 minutes for range because that's the period of consolidation that's kind of clear and obvious before a news get released. Okay. So I would go for 50 minutes, but yeah, depending on the volatility, for example, like gold, going on 50 minutes is ridiculous because we have a much bigger swing that goes on in the market, and I think the hourly one would actually be pretty stable. But for the Euro USD, you see how it's pretty obvious on the 50-minute time frame. It kind of ranges a little bit, but on the hourly time frame, it's actually not very clear. So I would go with the 50-minute time frame normally before news releases to set up our range. Okay. Okay. Cool. All right, the other one, it's the buy limit and the sell limit strategy. Again, I wasn't very comfortable talking about this when we run our news trading session the past few months because we don't have any recent practice. But I know a lot of you guys that are watching this right now probably just came off the SMC webinars. So during the SMC webinars, we talk about order blocks, we talk about fair value gaps, we talk about liquidity levels, so you kind of have a little bit of an understanding into where to actually place a potential limit orders. Okay, a limit order is basically if you look at the local previous high and if you suspect that previous high to be a resistance zone or a resistance cluster, it could be a bearish order block. It could be a bearish fair value gap, for example, or it could be a buy-side liquidity. If you're thinking about that level as something that could prevent price from going any higher, then that's where you actually want to place your sell limit, because the sell limit pending order that we have here means it is at a higher price. Okay, let's say we've got news releases in 45 minutes. And I expect the Euro USD in the next 45 minutes to continue to go up for a little bit. I would place my sell limit orders up there because I want price to go up before I actually want to trigger a sell position. And just in case if I don't have time to react to the news, maybe there was a question, what if there was a spike? Right, a spike could happen. Maybe it could take my limit orders, but I wasn't able to react manually quick enough to sell that position. So I want to have a sell limit order. So this is basically what happened. You can see with this one here how that order is actually triggered. It's actually a little bit of a quick spike to the upside, touches that sell trade and activated the sell trade. Manually, you would probably miss this trade. So sometimes the sell limit orders is super useful. If you anticipate a particular price level to become a rejection level, then you can create a sell limit order. If you anticipate support to be a level where price could actually bounce, then that's where you want to buy. Okay, so sell limit, it's going to be your sell trade, your sell trade at above the current market price. So right now, if you take a look at this example, price is currently at 1.1057. I only want to sell this when price goes to 1.1072. This is an example on the Euro USD. Okay, why do I want to sell at 1.1072? Maybe I'll look at that, and I look at that as part of the order block that we have there. It was previous highs in the market as well. I expect this previous high to hold the market from progressing any higher. So I'm going to place a sell limit order up top just in case market spikes. I could be in for that sell trade, but if I were to trade manually, I don't think this would actually be triggered. So that's where we want to use the limit strategy. Okay, so for this one, I'm actually going to load up trading chart, trading view, trading chart, right? Because I want to give you a little bit of an example into what's going on. Let's take a look at this one here, for example, right? So with the example on the Euro USD, there are a couple of levels that we might want to pay attention to. For example, this one here, if we take a look at that level, about 1.0780 all the way up to 1.078, 1.0785, might be expecting this to be a little bit of an order block in the market, right? So that could actually be a bearish order block. So I don't want to sell here. I only want to sell up there if price goes all the way up to about 1.0780, right? I want to have my stop loss there, and then I want it to go lower than where the current market price is, maybe at 1.0750. This is where you place your sell limit order. Okay, this is going to be your sell limit order up there. So you are expecting price to go up to that particular price level and then goes down. Okay, that's where we want to have a sell limit order. A buy limit order, maybe we can find one on the Dow Japanese Yen. Okay. Dow Japanese Yen is actually just bouncing off 145. There's actually a little bit of a liquidity sweep goes on in the Dow Japanese Yen, so it's actually very interesting. We just bounced off the Dow Japanese Yen, so this could actually be more or less a life example here. But in any case, let's say we are anticipating 145 to hold, right? So price is currently bouncing off that particular price level. So I guess this is actually going to be a little bit more of a sell stop order in any case. But you know, if you're thinking, oh, the downtrend is so strong, maybe we look at the latest fair value gap, which is up there. For example, all right, there's actually two fair value gap. The other one is actually a little bit smaller, which is here. All right. We can also create a sell limit order up top if we want, maybe somewhere about 145.75. That's where I want to have my sell limit order. I want to have my stop loss above that level. I want this to actually break lower towards 144. Yeah, that's where we could create another sell limit order. Do we use limit orders on unmitigated order blocks? That would be the logic. Yeah, that would actually be the logic, and this is why I'm actually more than comfortable to talk about the limit orders nowadays, because we just finished off the SMC. It's still fresh in our head. We still have our order blocks and whatnot, so you can actually use those limit orders to actually trigger those order blocks if you want to. And if you have that particular order blocks, for example, here on the Aussie Canadian, for example, all right. What's the current situation on the Aussie Canadian? Technically, this is still in a downtrend. We have a little bit of a change of character. Yes, we do. In terms of resistances, we actually have a little bit of resistance at about 89.50, for example, right? So I could do a few things over here, right? We got news releases coming up. I might actually want to do a buy stop. I don't know, right? I might actually do a buy stop above that. If I expect that price level to actually break, so my buy stop is above that level, and maybe I can also create a sell limit at the same time, just at about this price level there. So I could vary it. I could create a buy stop, and at the same time I could create a sell limit order just in case if it breaks and hits my stop loss. You see where I'm going with this? So if I were to have these two orders, what's happening here is that I would actually anticipate this level to kind of hold the market a little bit, right? So if I do a sell limit order and price goes there and it got rejected, I would be in a trade. However, if my trade, the first trade fails because it hits my stop loss, it will actually break above the current range, and I could actually have my buy stop above that level. So just in case if it does breaks resistance, I would actually still be in a trade as well. So I'm planning out two potential scenarios. So sometimes we can actually use a sell limit order and then a buy stop order at about the same time as well. All right. Oh, I see where this is going. Everyone's just asking me about the range and potential movement. But for the, it's okay. As long as we can do an example, that's fine. For the Euro USD, I might be able to do a sell limit order there. But look at this low here. If it gets broken, right, I can also create a buy stop order, which is a little bit lower than that range, for example. So just in case, two scenarios, right? If price breaks my support, I would be in a trade. If price didn't break support and actually goes up first, it will actually trigger my sell limit order. So I have two options. I can employ both stop orders and limit orders at the same time. If you know how to map what you're looking at in the market, if you anticipate, okay, news is going to get released in 40 minutes, all right? What if it breaks support? If it breaks support, then I'll create my buy stop. Just in case I'm not around in front of the computer, it slides down, I'm still in the trade. What if it doesn't break support? What if it goes up and try to break the upper range? But if it fails, because I'm looking at this, there's actually a little bit of an order block. Then if it fails, I would have my sell limit order up there with a very small stop loss, which is only about 4 or 5 pips. Yeah, hopefully this makes sense. Okay. So you can also trade after news releases. We can look at what's going on with news releases. Maybe we can actually form a little bit of a trend line that we have there. You know, market creates a higher high, so we know that we actually want to start buying after the news releases, right? What happens here? You can see that one long spike there. That's a news release, and with the NFP, typically it comes back into range for a little bit. I think this is a CPI release because with the NFP release, typically it could actually revert back on itself. But I think this is a CPI release. It goes up and it kind of pull back a little bit, correct itself, continue to go up, correct itself a little bit, right? That's when you can actually jump in on your trade as well. So with news releases, you can actually trade after the news as well. With the NFP, typically we actually do two kind of trades, which is a straddle, which is a range breakout that we just show you, and then the second one is actually a little bit of a fade into the market. I think though, the past 6 NFPs that we've done, I think there's only about 1 or 2 fade that we actually did live during the trade, because it does take time. Sometimes it takes an hour, sometimes it takes 2 hours, or maybe even more. Okay. All right, let's do a little bit of a quick test. Hope you guys are paying attention. So I'm going to ask this. All news can be divided into 2 categories. What are they? Okay. We talk about the different news types. They can be divided into two categories. What are they? And then what type of orders is most often used in news trading? Let's just pause here and answer it first. Okay, all news can be divided into 2 categories. Please give me an answer. What are they? See if you're paying attention. And what are the type of orders that is actually most often used in news trading? Anything? No take? Okay. All right. News can be divided into 2 categories. What are they? No one's giving me the first answer. Someone's already giving me the second answer. The sell stop and the buy stop. Yes, the sell stop and the buy stop is actually the most often used type of orders during news trading. Sell limit, sell stop, buy limit, buy stop. Yep, you can also do that, but in terms of the limit and the stop orders is actually much more often used. But yes, the answer is correct. There are 4 pending order type that you can use. It's the buy limit, buy stop, sell limit, and sell stop. Different news can be divided into 2 categories. What are they? Positive news and negative news. Oh, that's actually a very good take. I would actually accept that, but yeah, no, that's not the answer. Expected and not expected. Yes, the news categories are the expected categories or the scheduled categories. Periodic, yes. Expected, and then the unexpected news. Okay, with the unexpected news, it's actually been a little bit unfortunate that it's been happening quite a lot lately in the past 3 years, but we get a little bit of a surprise every single year, and even towards year's end, we did see a little bit of an extra volatility that kind of push up gold prices. But yeah, those are those are events that are unpredictable. I don't think the general public knows that, oh, this is going to happen, that's going to happen, it's going to happen today, it's going to happen then. Yeah, those are unexpected news, okay? All right, the last one. Can you use ordinary indicators to trade the news? That means indicators like a moving average, maybe a stochastics, Bollinger Bands, RSI, Fibonacci. Can you use those trading indicators to trade the news? I'll just cut it short. The answer is yes. So the way with news trading is, the reason why we kind of format it this way is this. If you're someone new, news trading, it's something that's not really avoidable, right? The only thing that you can do with this one here, if you want to avoid it, is not have a trade positions, okay? So, can you use ordinary indicators to trade the news? The answer is yes. It does help out if you understand the context of the market from a fundamental perspective. So, if you're using technical indicator, for example, an RSI or stochastics, you might be looking at a potential divergence in the market. You might actually be measuring a potential overbought, oversold in the market. Does that help with your decision when it comes to placing the order types? It does. All right. Can you use those indicators? Yes. But here's the thing. Someone answered no, right? 2 of you, 3 of you answered no. And by right, you can use those indicators. However, the one thing that I talked at the very beginning of this session is that I don't want to have a certain bias before I go for that news release. For example, with the NFP tomorrow, right? Let's discuss this here because it will probably save us some time tomorrow anyway. So I can go for the NFP numbers tomorrow, which is going to be here, right? The non-farm payrolls is going to get released tomorrow. I have a little bit of an indication of what it is because previous number is 150,000. The consensus is currently running at about 180,000. The forecast is about 160,000. So, do I expect the NFP number to jump up? I would say so. Yes, I do expect the NFP numbers to be a little bit better than last month's number. However, the NFP number is actually very tricky because the previous number of 150,000 could actually be revised up and down. So your expectation of 180,000, it might not be positive. Okay, here, let me explain. If you expect tomorrow's NFP to be 180,000, and this number has actually dropped down from 189,000 when I do my outlook this week. But this 180,000 might seem like a positive compared to 150,000 last month. Okay. However, if the previous month's number from 150,000 was revised up to 200,000, and this month's number is at 180,000, you're actually looking at a disappointment in the market. So with news trading like this one here, it's very specific. It's not for all news trading. It's very specific, right? So the question to whether or not you can use technical indicators or you can use ordinary indicators, the right answer is actually yes. However, when it comes to news trading, you really want to go in with as little bias as possible, right? You don't actually want to come in expecting, oh yeah, I expect the NFP number to actually be good, because as I said with the NFP, it's actually rather unique because the previous number gets revised up and down, and even if the number looks good from consensus, it could actually turn negative very, very quickly. But yeah, can you use indicators to trade the news? We can, because let's say if we are trading the news on this one here, we are still going to be looking at that bearish order block as our indicator from a price action, right? It's still an indicator to me. I would expect that to kind of work. If I were to use a Fibonacci, for example, if I were to measure this Fibonacci, I expect about 50% correction. Does that work? Of course it does work. Okay, so by right, it should work. And it should help you with your trade. But try to minimize the bias that you have as much as you can. Okay? All right, so again, the code is non-farm 2023. Make sure you are using this code if you are depositing into your Octa trading account to double your deposit bonus. And any questions for tonight? Pretty clear on what it is. I think the main focus for today is actually different order types. Just want to make sure you understand the different order types, because we are typically going to employ the stop orders tomorrow. And the whole point, and I think it's good having this before the NFP, is that tomorrow I can spend more time looking at different instruments, because most of the time we only have about 5 minutes before the NFP release where we kind of set up our range. Okay, so hopefully we'll be able to do more instruments tomorrow. So if you are wondering, I'll do the typical majors, right? But if you have any requests on anything on a different instrument to be marked up for the range where the buy stop and the sell stop is for tomorrow, make sure you jump in for that live trade, which is going to be tomorrow. Live NFP trading. It's going to be scheduled at, it's not the same time. It's actually going to be an hour later from when we started this webinar. It's actually going to start now, tomorrow. In 24 hours time, we're actually going to be starting that session. So make sure you jump in tomorrow. That's for the NFP. And the CPI will be on the 12th of December. Okay. That's the wrong slide. That's the slide for the CPI, because normally we do this in between. Can we see the code? Yeah, sure. It's non-farm 2023. For buy stop and sell stop order, how many pips should it be? That's a very good question. Really depends on the range itself. Please tell me, can I use full amount on NFP news tomorrow? That I'm not going to be able to answer that. Everyone is going to be trading on their own very specific lot size, but yeah. So let me give you a little bit of an example on the number of pips, for example, for any news trade. How do I put it for this one here? This is from yesterday, yeah. We're still looking at that. Okay, the pip doesn't matter because it depends on what time frame you're looking at. Because if I were to look at this from an hourly time frame, this is on the dollar Swiss, for example, I'll be looking at this range. That's about 50 pips, right? So that means my orders is going to come in above that and below that. So the difference would obviously be more than 50 pips. But if I were to go on a 15-minute time frame, for example, maybe just for an example, I'm going in on a shorter time frame, right? I'm only looking at this range here to place my orders. Can I do that? Yeah, I have the same buy stop order, but maybe I'll have my sell stop just below this low here, depending on time frame, obviously. I'm only looking at about 17 pips of difference. So there's no right answer to how many pips should a buy stop and sell stop be from the current low market price. But I would say it's best to have it not too close to the current price level. Give it a little bit more distance. For example, here, this one here, I give it about 10-15 pips of range. You know, I'm okay with that. If you see this turning green, right, sometimes it means it's actually too close, because that green means within 10 pips, that order is going to get triggered. But really depends. If I were placing it right now, I'm like, half an hour away from it. Maybe it's still too early. So that's why I place my stop orders about 5 minutes before news releases, just in case if the market still creates a range that maybe pushes it down a little bit lower. I don't get triggered for nothing. I only want to be in when the news gets released. Is it possible to know the revised numbers before forecast? No. So what happened with the NFP release tomorrow? And I'm gonna explain this again tomorrow anyway. But the NFP number is gonna get released. For example, 180,000. Everyone's gonna react to that 180,000, and at the same time, the revision comes in, right? Or the revision could actually come in about a minute late, for example, or maybe a few seconds late. So that's the reason why we have a little bit of a whipsaw in the market. Typically, the market reacts to the initial release, and then everyone starts realizing, oh, there's a little bit of a revision that goes on, and that creates a little bit of a whipsaw as well. But no, we actually don't get a revision first. We get the revision pretty much at about the same time the news gets released, and that's where it becomes really tricky. Okay. All right, so I'm actually gonna cancel out this trades because I'm not trading the news for tonight. But if you guys want to place your trades, it's best to do it about 5 minutes before news gets released. Okay. All right, cool. All right, thanks for joining in tonight, and good luck with your trades. If you're trading the unemployment claims in about 24 minutes time. And I guess I'll see you tomorrow. But there's a question regard to SMC order flow you explained yesterday was good, but just want to know, is that order flow for gold or metal, or is it this? It's only for spot prices, not options. If you can find prices for gold options, I think it's best to use commitment of traders rather than option expiries for gold. I don't think in terms of gold option expiry. You can look it up, but I don't think it's easily accessible. That's all I'm saying. But the COT should be easily accessible. But yesterday, in terms of the option expiry, those are only for FX. The link that I gave you was only for FX. I already gave you a little bit of a hint into the news entries for tonight. All right, cool. Let's wrap it up for tonight. Good luck with your trades, and I'll see you tomorrow during the NFP live trade. Thank you.